Okay, so Hans, you know what we did since I failed to connect you the big screen, we
Yes.
decided to come closer to the small screen.
Okay,
So
okay.
we get closer and closer. You cannot see all of us here, but
Some
but
of
there are,
you.
yeah. For some of them, well, you are already familiar with Anna, of course.
Sure.
Yeah, a student of my course here.
Nice to meet you.
And Alessandro Casanova, who is
Hi,
another
Alessandra.
PhD candidate with me.
Yes.
And we have other people connected, like 13, 14 people connected at the moment who are attending this event from home. And well, how to begin with? Everybody knows that I'm not good at presentation, but I have one virtue. I keep presentation very short, which is quite an asset these days. So
That's
today
quite a virtue, Marco.
it's a very, very important virtue indeed. So Professor Hans Gribnau is, well, first of all, a dear friend of us, dear friend of mine. We met several years ago. Probably the first time was in Edinburgh, too many years ago, I fear, but
Yeah.
but it's okay. And in my view, Hans is a unique person in the field of taxation, and very unique because he is able to merge together the technicalities of the law with the perspective of the tax law, with the vision, with a perspective that comes from studies in philosophy, theory of law, and other disciplines, which is something that, prego, join us. Other people are coming in the meantime, Hans. And so his unique capacity is to blend and mix the perspective of taxation with the expertise and knowledge of history, philosophy, theory of law, etc. And we have an example of this outstanding approach, right, in the paper that, and in the article, because actually this paper has been already published in the e-journal of tax research. So we are talking about an article, not a paper, on sustainability and tax governance, a shared responsibility. Uh, how to begin with? Well, normally when we think about taxation, we think about a kind of payment that must be made uh, from taxpayers, individuals and companies to the state. It's a duty to pay taxes consistently with the ability to pay. All other conditions are set by the law. But here we see something different. Here we see that, well, taxpayers, in particular big companies and the government, are not fighting each other, are on different trenches. They are supposed to collaborate. They are supposed to work together, maybe, for a higher goal, for a purpose which is perhaps even more important, much more important, which is sustainability. So Professor Gribnau, Hans Gribnau, has investigated the ways and the means of this collaboration in order to see how we can approach, let's say properly, this new relationship: taxpayers, states, and the shared responsibility. Maybe I was not true with my opening to keep the things short. I was too long, maybe, but Hans, now the floor is yours. And for the people attending this event from home, I see many new names. I mean, people that are not here in Ferrara. We have this sort of arrangement. Professor Gribnau, Hans Gribnau, will deliver a presentation for more or less 1 hour. Then we will have a short break to take some air, some coffee, maybe if you are in Italy. And after the break, there will be space and time for questions, input statements, and maybe a debate. Enough on my side. Hans, the floor is really yours this time.
Thank you very much, Marco, Professor Marco Greggi. Thank you very much. It's a huge honor for me. Unfortunately, I'm not very fluent in Italian. The only sentence I know is una macchina senza benzina non va. That was a language course I followed once, and it's a bit outdated because, of course, nowadays we have all kind of tax incentives to go for electric vehicles. So una macchina senza benzina non va is not true anymore. Okay, that was just a joke, but it was a tax-related joke, and that's an important point. But there, because there you see that even by incentivizing electric vehicles, the state uses its power to tax to incentivize people to behave in a certain way. Okay, shall I share my screen? That might be the best thing to do.
Okay.
So,
Okay, it's
uh,
working.
is it working?
Yeah, unbelievable. It is.
Do you see the slides?
I see you are invited to present. I
But
was
I do not see the way I could share my slides. It's up here, but this is myself, so that's not very interesting. That's very strange because I don't see the usual. Okay, perhaps when I change my screen here, then do you see the slides now?
not yet. There was a moment before, Hans, where we
Yes.
could see your screen.
Oh, okay. There was a moment. There was a moment. It's not this one. Ah, okay. My No, it's not this one. Oh, yes.
Uh,
Is it this one?
Yes, 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 yes. It
Well, that's
works.
almost perfect because I'm not very capable of using these technical things. Okay, I go and try to do it like this. Yes,
Yes, full screen.
you get a full screen. Okay,
Yes,
quickly then. Well, this is the paper I'm presenting. Here is the overview. So it's about sustainable development, but it's also about the share responsibility you talked already about, between share between the private sector and the public sector for sustainability, and I apply it to tax, to the responsibility for the integrity of the tax system. So that requires governance, and governance, importantly, is not only management and oversight, but also accountability and transparency. Transparency in order to have some dialogue with stakeholders, with voters, etc., etc. We will delve into that. So that's the two parts of governance, so the management oversight, but also the accountability and transparency. And on the other hand, you also have, let's
Victor,
say, public
I'm
governance
sorry.
and corporate governance. Yes?
no, there
Something
is.
wrong?
Okay, no, no, no. There was a problem with the microphone.
Okay. So this tax governance, especially sustainable tax governance, could learn something from corporate social responsibility, which is, let's say, a long established way of looking at corporations. And for tax, especially important is the idea of going beyond compliance, because we all know that compliance with tax law often amounts to compliance, let's say, to comply with the letter of the law, and that means that you're not engaging in tax evasion, but tax avoidance. And we say as lawyers that's legal. But the idea of corporate social responsibility adds something and said, no, you should go beyond compliance. And that means also that you should not have, let's say the key idea is then that you should not behave in an irresponsible way. And let's say then the link between sustainability and ESG, the ESG, we will delve into that, but that's and the idea of environmental, social, governance dimensions and the T of tax. If you combine these, then tax is the key idea, the basic idea is tax is seen as a contribution to sustainable society. Okay, This picture, I'm sure you all know, but the important thing of this picture is, of course, that you see all those sustainable development goals. Two remarks. One remark, some people who didn't delve into this thought, well, this is about developing countries, which is evidently not. Huh? It's about all countries. All countries could make major steps in this direction, huh? To promote all these kind of goals. So it's not only about developing countries. The second remark is an interesting remark. You have all those, let's say, substantive goals, goal 1 up to 16, you could say. And goal 17 is a bit special in the sense that you could say this boils down to the idea of partnerships. But partnerships, what does that mean? That governments cannot achieve these goals on their own. So, on the one hand, they should try to achieve them in cooperation with other governments, but also in cooperation with civil society, with people, with society, but also with companies, multinational companies, which are part of society. So you have to work together. And we all know, of course, that there are many corporations around, especially those American big tech companies, but also, let's say, the major multinationals who are more powerful than small states. So they have really power to change things, and that accounts for the idea of a shared responsibility. And interestingly, let's say SDG 16, that's about the rule of law. I will come back to it, which is very important. So you should always keep to the rule of law, but you could also say, in that sense, that tax legislation, tax enforcement, etc., all falls under the heading of SDG 16. Okay, just the basic governance. I will go quite quickly through it. But governance actually has the dimension, let's say, this is a more technical definition, the activity and process or complex of processes involving a number of levels of layers. You know, all when we're talking about European Union, for example, nowadays we talk about multi-level governance. The governance at European level, the governance at the level of the states, etc. So if you talk about governance, you talk about quality and effectiveness. And effectiveness means you try to realize the goals of an organization, the objectives. So that's the idea of effectiveness. And there is an internal and an external dimension. So the internal dimension is, of course, the people working in the organization, be it government, be it a multinational, a corporation, whatever. But there's also an external dimension. And the idea behind this is that we call these people, these relationships, then we talk about stakeholders. So the people who can affect or are affected by an organization's objectives and actions, those are called stakeholders. So internal stakeholders are, for example, employees. External stakeholders of a company are, for example, well, consumers or other businesses, but also government. Also, government is affected. States are affected, especially by big multinationals. So the important thing here is that governance, I would emphasize, includes two dimensions: management and oversight, but also accountability and transparency. And transparency means communications towards internal and external stakeholders to engage into some kind of dialogue. And we all know that transparency nowadays is some kind of a buzzword, but it becomes more and more important. But it serves, let's say, as a way that that you give insight in what you are doing, and in that way, it's an instrument for accountability. So, on the one hand, public governance, well, the exercise of political authority and the use of institutional resources. And of course, the purpose of government is to promote the public interest and to provide goods and services that society needs. Then you could say, but if you add some qualification, the idea of good public governance, then you add something like being responsive to citizens' concerns, expectations, and interests. So it's not about what politicians like themselves. It's not about what is good for government. No, good for states. No, in the end, it's about the citizens. It's about the citizens' concerns. And interest. They should be served. And the idea of responsiveness is in that sense important, that there is often little trust in government. Well, responsiveness could help restore trust in government. And that means, in my opinion, when we talk about the rule of law, we are not talking only about minimum norms of legality, constitutionality, and formal decision-making procedures. Should go a step further. For example, in the Netherlands, we have something like principles of proper administrative behavior. That means that government organizations such as the Dutch tax administration should not only behave in a legal way, but should also respect some norms of proper behavior. For example, if you say to taxpayer, I will do it this way, I will apply the law in this way, then you should keep your promise. Of course, then the next step is public tax governance, which is part of public governance and which relates to tax especially. I rush a bit through the paper, but we need time for discussion, and I immediately link it to public tax governance, so it's to sustainable taxation. And I try to get a clock here, which makes it easier for me, yes, to check the time. And you could say sustainable taxation, let's say, is in itself sustainable in the sense of future proof. So not already aimed at sustainable development goals, but future-proof taxation that should be fair, responsible, efficient tax legislation, tax enforcement, and taxpayer protection. But and that means that taxation should deliver in terms of GDP, but also in terms of well-being. And then this well-being being there, you see the connection to the sustainable development goals. But you could say, let's say, good taxation, sustainable taxation, future-proof taxation, for example, respects the principle of legal certainty. Legislation which, let's say, changes too often, too quickly, is not future-proof because taxpayers cannot attune their behavior to the tax law because it's ever changing. So that's just the idea of future proof. But the other part of sustainable taxation is more linked to these SDGs. Well, sustainable international tax system requires international cooperation. So countries, they are not autonomous. They need to cooperate, and they need to improve the international rules, for example, which is important for multinationals to eliminate double taxation, but also mismatches, which enables double non-taxation. And we see those international initiatives, BEPS, ATAT, Pillar 1, Pillar 2, etc., etc. And these are very important because you need a good system of rules. That's the let's say the basic line. That's, let's say, the substantive point, but you could also say there's a kind of procedural dimension. You need inclusive decision making, and then you need again this idea of partnership. So better rules, but also, let's say, as a result of better, more inclusive decision making. And of course, we also think then of, let's say, inclusive in the sense of all countries who are actually involved. And in that sense, the UN initiative is a very important initiative. So to get be more inclusive, to get also the developing countries at the table and give them a real voice. Okay, then really focusing on the sustainable development goals. We all know, and that's very basic, the tax system has three functions: the budgetary, redistributive, and the regulatory function. And you could say these are more specific functions, but the overarching function, I would say, is, let's say, tax as such is to sustain the society. The tax system is there to sustain society, to sustain trust in society, trust in the markets, for example, trust among people. So also, and trust, of course, is a very important value, but also the value of reciprocity in the sense that everybody does his or her share. And also this idea of social cohesion, so that people that you don't have some kind of atomistic society, but that people, well, in a way, care for each other. So we, let's say, help people out, help people who are not able to care for themselves. So that's the idea of social cohesion and solidarity. And in that sense, I always say taxes are a moral phenomenon. Okay, back to SDGs, the three separate functions. So you could, of course, say the budgetary function, just collecting money and then give this money to all kind of departments, for example, the department for infrastructure, the department for healthcare, etc. That's a way of achieving SDGs because you collect the money and then you give it to the other departments, what we call the spending departments, and they can spend it for SDGs. Well, here you see that international tax competition may exactly undermine achieving SDGs because this puts, of course, pressure on the amount of money you can collect. If you let's say, if your tax rate become lower and lower, or you give all kind of tax privileges, so to say, to multinational companies, you collect less money. On the other hand, the behavior of corporations, multinationals, engaging in aggressive tax avoidance, that undermines also the achievement of SDGs. Well, then that was the budgetary function, just collecting money. The second function is the distribution of the money you collect. You can do this, of course, on a national and an international level. And you could say, well, you can use the money to reduce the unequal distribution of income and wealth, SDG 10, but you can also use the tax system itself by entering some reductions, etc., for people who are are less able to care for themselves. So you could redistribute within the tax system. And then we actually change to the regulatory function. Then you really use the tax system itself in order to achieve SDGs. Well, and we know all the different examples. I already, for example, environmental goals. I already gave this example of car taxes, incentivizing the sale of hybrid and later in the Netherlands nowadays electric vehicles. So then actually you use the tax system itself, so you don't collect money and then give it over to a spending department who goes to subsidize electric vehicles. No, you say, okay, we do this in the car taxes, via the car taxes itself. So then, of course, you collect less money. But this is a balancing act because here you see the different SDGs. Well, they might somehow conflict. SDG 8 regards inclusive economic growth, while SDG 10 demands reduction of inequality in and among countries. And well, let's say the last years, we have seen that exactly more economic growth meant also a growth in inequality in many countries. So it's really is a balancing act. Importantly for me, and that refers to the idea of sustainable tax legislation in the sense of future proof, is the idea of respect for fundamental rights and the rule of law, because you see many of these tax incentives, and then you say, but this is just some kind of privilege for a very small group, and it is, let's say, there's a kind of idea. It's sold to the general public as okay, but this is good for the economy, this is good for the environment, but actually it's just a kind of tax privilege for a very small group. So then you get a violation of the principle of equality. Well, another important rule of law principle is, of course, certainty and proportionality. And that's important because if you violate the rule of law is really, let's say, the basic. You should always respect the rule of law. You can't say, okay, but this is good for the environment, so we use the tax law in a way which violates the principle of legality. You can't do that. Importantly, a second thing is that if you use the tax system too much to incentivize people to and corporations and organizations to behave in a certain way, then you really start steering them by looking at rules, and they get a rule focus, so they are only looking at these rules and asking themselves what is in for me. So they don't see tax as an idea of contributing to society, a very basic value. No, they just are thinking, okay, what's in for me? What can I get out of the tax system? So that's what we call crowding out ethics. A rule focus of people which you may promote by trying to steer everything in society, that might crowd out ethics. And that means that people are less intrinsic motivated to pay taxes. The second point of the second dimension, as I said, is transparency. And transparency, you could say, is the accessibility of information to stakeholders of organization regarding the matters that affect their interest. Public transparency is, of course, a principal democratic value because it helps citizens to get an insight in what actually the democratic process is doing and what the results of it are. And in that way, you can, as a citizen, you can control the government. And as you, if you like, you the next time you may vote, you vote other representatives. So, as Judith Friedman said, public tax transparency serves the accountability of the tax authorities and offer the public a mechanism to enable it to check up on these authorities. So also in tax, transparency is very important. Okay, then we change from public governance to private or corporate governance. And the usual definition, again, is management and control, responsibility and influence, and supervision and accountability. And accountability, again, that's the link to transparency, which is very much, as I already said, a buzzword nowadays. All companies want to be transparent, and many companies want to be or feel obliged to be, even to be transparent about their tax. I will return to that. So, what is corporate governance aimed at? At the realization of the corporation's purpose. And this purpose of a corporation determines its governance. And as the British Academy report in 2018, so that's about 7 years ago, said, the purpose of corporations is to produce profitable solutions for the problems of people and planet. So this was really some way I would say from the Anglo-Saxon perspective, which is really was for a long time focused on shareholder value. This is really a kind of game changer. It's really a shift in perspective. To produce profitable solutions for the problems of people and planet. So not only for the shareholders, not only for the shareholders, it's not only about shareholder value maximization. According to Maya, who is an Oxford professor in corporate governance, I pronounce it in the German way, but I suppose in English it must be something like Mayer. Three components of corporate governance: the articulations of the company's moral values and principles. Just the first thing is, as a company, as a corporation, what are our values? What are our principles? What do we stand for, so to say? The second dimension, the second component is accountability and accounting for liabilities attributable to the values and principles. So who is liable for which value and principles? And this accountability is towards a wide group of stakeholders. So not only to shareholders, definitely not only to shareholders. And the third step is that you have to attribute the responsibility for the attainment of your purpose, of your values and principles to different groups, different parties, different departments in a company, different persons, whatever. And also some kind, interesting of course for a lawyer, some kind of adjudication over disputes on this. And then he says, and you also find this in the British Academy report, that you need to repurpose, to change your purpose toward a wider group of stakeholders. And that means that you will have a more pro-social purpose. Again, not only focused on shareholders. And that exactly allows for the turn to sustainability. Okay, I think I will skip this slides, but I have to mind the time. This is a kind of summary, and I'm quite sure that now you all have read this slide. So we changed to tax as part of responsible business conduct. Actually, you see that also in a quite recent edition of the OECD guidelines for multinational enterprises, and now they also put in it on responsible business conduct. So it was OECD guidelines for multinational enterprise, and now they added on responsible business conduct. And here, and you know, of course, by these guidelines, these are recommendations addressed by governments. So it's an organization of governments to enhance the business contribution to sustainable development. Dus here you really see it's in the key of sustainable development. Responsibility means contributing to sustainable development. Importantly, of course, that it's about voluntary behavior. So these guidelines are voluntary and are not legally enforceable. So we are talking about soft law. Now, the OECD guidelines say, okay, many enterprises have already adopted measures to comply with the law and standard of business conduct. So here you see complied with the law and standard of business conduct. So apparently it is the law and something more. But also they are committed to transparency, and often this is done in voluntary codes of corporate conduct, which express actually international standards and ethical values. So again, comply with the law, but also international standards or ethical values. So here you already see, and I will delve into that later, but here you see something like beyond compliance in the sense of beyond compliance with the letter of the law. So comply with the law is not and comply with the letter of the law anymore. So no strict compliance. And there's a special chapter dedicated to taxation that was also in the previous version of the guidelines. But here you see, and that's why I show it. uh, Companies, enterprises should comply with both the letter and the spirit of the law, which is of course not amazing given the previous slide about ethical norms, but it also goes for tax laws, the letter and the spirit of the tax laws. And you also see that enterprises should treat tax governance and tax compliance as important elements. So here you see governance and compliance in relation to tax are connected. And it is often then connected to risk management system because you want to know as a board what are our risks with regard to this tax governance and tax compliance. And that's, let's say, the international scene. Here you see the Dutch corporate governance code, which is as such a voluntary code, but it is, let's say, no, not really enshrined, but the legal basis for it is in the civil code. So it is based in the civil code, but let's say the elaboration of it is done separately in this corporate governance code, and it's recent, let's say, often, no, not that often, but frequently updated. This is the most recent update, and then you see that paying a fair share of tax to the countries in which the company operates has been adopted as an important element of corporate governance in the Netherlands. So this is the general corporate governance code, and for the first time, tax entered the scene, paying a fair share of tax to the countries in which the company operates, so the different countries. Another code in the Netherlands is the Dutch Tax Governance Code. This is dedicated only to tax governance. And the author is the Dutch Employers Organization. And here again, you see, because of course you want to know, okay, paying a fair share. Here you see actually that it said to comply with the letter, the intent, and the spirit of the tax legislation. Now, well, of course, the question would be what's exactly, let's say, the difference between the intent and the spirit of the tax legislation? Well, perhaps you could say, okay, the intent is more narrow. For a lawyer, I would say the intent is a bit more narrow, but the spirit of the tax legislation is definitely the idea of, well, you contribute. So you could comply with the letter and intent of all tax laws and still hardly pay any taxes. Perhaps you could manage that, but that would be against the spirit of the tax legislation, I would say. Interesting is that if you don't apply this principle on the other principles of the code, you have to explain this. So you have to make a note in your annual statement and say, okay, we do not comply with this. So that's really a matter of accountability and transparency. Okay, comply with the letter and the spirit of the law. I already said that. This goes for the public sector, as I said, not only acting legal, but let's say acting in a more legitimate way. The same would go for the private sector, I would say. Importantly, is that the international tax system is improved because you need good rules. If you only say to let's say to the taxpayers, okay, our tax system is a bunch of rules, it's a mess, but you have to go, you have to behave ethically. Well, that wouldn't do. You have to have a good system of rules. You have to try to go for the best system. Only then you could say, okay, and now you have also a responsibility. It's a bit black or white, but you understand what I mean, I suppose. But The point is that even if you would have, if you would have an optimal international tax system, you will never have a perfect tax system. You will never have a perfect watertight legal system of tax rules. So still there's always room for some kind of aggressive tax planning, for aggressive tax avoidance. And that, I would argue, means that these enterprises have to take their own responsibility seriously. And here you see this idea of go beyond the letter of the law. Again, you already saw it in the multinational guidelines. You saw it in several code of conducts, but also let's say in voluntary codes. I think it should be. And here we can learn from the experience of many companies with corporate social responsibility, because they have for a long time now a corporate social responsibility strategy on board. If you look at any big multinational, they will always talk about corporate social responsibility. So that means that if you, let's say, add sustainability in the sense of environment, then doing business that should take into account the economic, social, and environmental impact. And in that sense, if you take taxes on board, if you connect it to taxes, you should understand that taxes are contributions to a well-functioning of society. Then this idea of ethical considerations beyond compliance, which is a very basic idea within the corporate social responsibility theory. The idea is that business voluntary, again, it is voluntary, go beyond what is required by the law. And that means that, again, you can link it to legality. Compliance demands more than just passing the test of legality. Again, remind that, remember that legality is okay, I stay within the letter of the law. So I'm not engaging in tax evasion, or perhaps it's tax avoidance, but my behavior is legal. That is not the idea of let's say, beyond compliance, as it's argued within corporate social responsibility theory. And I give you the quote. Actually, it's a quote from Carroll, who is a leading corporate social responsibility scholar for many years now. And he says, okay, of course, law is important. Law is codified ethics, and they constitute the rules of the game. So you have to abide by the law, that's for certain. But he argues, and I fully agree with that, law is distinguished from ethics. So that means that not all ethical behavior is incorporated into law, because if that would be the case, there would be any ethics. So there's only so many, let's say that there's only, well, a certain amount of rules, of ethical rules, of moral rules that you can incorporate in law, but there's still something left. There's still some idea of this kind of behavior is not ethical. So Carroll then says, if the body of rules has shortcomings, we need to fall back on ethical considerations. So if you see, okay, these rules have shortcomings, they fail, for example, to affect a fair share of tax, then you need to fall back on ethical considerations, and you voluntary have to as a company have to correct and supplement these shortcomings. And of course, in tax, the question will be, but what exactly are these shortcomings? And what if the rules do not have explicit shortcomings, and how should we correct these? So it's perhaps a matter of definition, but it boils down to the idea of how to conceive of compliance with tax law and tax obligations. Well, to explain that, here you have the famous CSR pyramid, and I think this is a very clear picture. He says companies have economic responsibilities. So they should be profitable. A company which is not profitable, well, gets out of the market and then there's nothing left. But in, let's say, in making a profit, you should always obey the law. Because that's the, so as it's said here on the pyramid, that's the society's codification of it, what is right and wrong. So you have this economic layer of economic responsibility and always within the law. So you have always to respect the law. So that's the layer, as he calls it, the layer, the second layer of the pyramid, legal responsibilities. But then he says corporate social responsible firms have ethical responsibilities on top of that. And then it becomes interesting because if we are talking about legal obligations, of course, many companies would say, but oh, yes, yes, sure, perhaps a bit of aggressive tax planning, but I stay within the law. But Carol would point out, but mind you, you have this legal responsibility, so apparently you respect your legal responsibility, at least you think that you do, but even so, you should interpret these legal responsibilities in an ethical way. So going for the letter of the law, complying with the letter of the law, that's not enough. That's just not enough. Then we meet, well, you could say if Carroll argues for this view, then you could say, well, but actually he is asking all taxpayers to behave like some kind of ideal taxpayer. Because all taxpayers should interpret the tax law in an ethical way and perhaps in an idealistic way. So they somehow should maximize the tax burden. And then I suppose also in Italy, there's a right for every citizen to structure transactions in a tax efficient way. So that's in the Netherlands. It's not in, let's say, not in legislation, but it's case law. And every now and then, our Dutch Supreme Court affirms this and says again that the citizen has the right to structure his transaction in a tax efficient way. So that's one thing, that's simply a legal right the taxpayer has. And a second point, of course, is but if you urge the taxpayer to pay a fair share, well, and that's often done in this discussion. That's not a very clear cut concept, because fair share is, you could say, somehow a bit subjective, because some people would say, well, you should pay more, you should not structure your transaction in this way, but in that way, and then you pay more, even if tax follows business. So I would say, no, you can't ask a corporate citizen to behave like an ideal citizen, but you can ask, especially if you are committed to corporate social responsibility, but also, I would say, outside the corporate social responsibility domain, you could say, okay, but you should go beyond minimalist compliance with the letter of the law. So you have this right to structure your affairs in a tax efficient way, but hardly paying any taxes, that's just irresponsible. That's corporate social irresponsibility, as it called is. And I would say that you should avoid this from a social corporate responsibility perspective. But what you nowadays see that people actually seem to want to go further because they want to be sustainable, they want to contribute to to society. Well, then you would say, but then it's not just about avoiding this minimum, this corporate social irresponsibility, but you should go a step further. Then we go into the idea of these ESG. I already mentioned it, I think. So we are clear that sustainable development goals, 17 sustainable development goals, are becoming increasingly important. They are also sometimes for companies important goals. What you see is that companies at the same time also think more in concepts such as governance, people, planet, prosperity, which you could say actually is a way of translating the first 16 or 15 perhaps development goals into let's say just four dimensions, and perhaps just three if you translate it in ESG, so environmental, social, which is a broad scope, and governance, which means that it's not only about trying to achieve these environmental and social goals as a company, but also take care that your governance is okay. So and governance is key to achieving these goals. So you need all kind of substantive measures, but also accountability and transparency. And again, both those dimensions of governance. What you also see nowadays that there's an increasing focus on the ESG perspective among investors. So investors, not let's say until 5 years ago or so, perhaps 10 years ago, it were mainly non-governmental organizations, NGOs, which were like Tax Justice and Network, etc., which were pushing for paying a fair share of taxes. Nowadays, you see that investors are really pushing it. Investors, for example, big pension funds, big and other big funds. You have this very famous Norwegian wealth fund, which is one of the major investors in the world, which is really pushing for sustainability. Okay, this means altogether that there's a push for sustainable corporate governance or sustainable business, as it sometimes is called, which means integrating greening, sustainability, long-term value creation, and corporate governance into a whole. And actually interesting, I already referred to this Mayo, this Oxford scholar who said actually, what a sustainable firm needs to do is exactly the same as what responsible firms should do. So again, this link between sustainability and corporate social responsibility. Well, here you see the three dimensions of corporate sustainability. So environmental is a bit fleshed out. Same goes for social, well, and governance. It's indeed about transparency, relationship with stakeholders, a dialogue with stakeholders, but also internally about leadership style and culture within the company. So also within the tax department, of course, executive compensation, etc. and etc. Risk management, of course, also tax risk management. Okay, and then often you could say, okay, but this is quite vague. What you then see is that all kind of organization that translate these different dimensions, E, S, and G, in a very specific ESG metrics. But that then would go too much into detail. Okay, again, what we now see is companies develop their strategic objectives around the SDGs in an ESG policy, where you could say, is that not a bit strange, an ESG policy, because environmental, social, and governance, but is it also, I think again of this pyramid of Carol, it's also about economic responsibility. So don't forget this economic responsibility. So you could perhaps say, well, should not be ESG, but EESG. Okay, but then the idea of voluntary going beyond compliance should be applied again to this whole idea of ESG. So all these dimensions of ESG, you should not only comply with the letter of the law, but you should voluntarily go beyond compliance. And that means that you could voluntarily adopt some additional principles, which you see that many companies do, but your motivation then should be, and you see that in many companies, especially with the young managers and the like, the intrinsic wish to do what is deemed good. And of course, that's the internal motivation, but you also see this pressure coming from stakeholders, as I already said, from investors. And even sometimes pension funds, but also nowadays sometimes from hedge funds and private equity firms. So then there is also the demand to be transparent on it, because if these firms are not transparent, they only say, okay, we are adopting ESG policy and we are doing good for the world. Well, that is not being accountable. So you should be accountable. You should enter into a dialogue with your shareholders, shareholders and stakeholders. Well, this you see reflected in the Dutch tax governance code. So again, this tax governance code. Here you see that companies seize tax, the companies who adhere to this code. So, and this is for multinationals. These companies see tax not as a cost factor only, but as a means for social economic cohesion, sustainable growth, and long-term prosperity. So here again, this broad idea of sustainability, but also in principle B, there is immediately this idea of corporate social responsibility connected to accountability and transparency, as part of tax governance. And importantly, it's a board responsibility. So in the tax world, it was for a long time, let's say, an iron law that the tax department. Well, those were the tax geeks, and they work in there, did things which were very technical. Nobody understood it, but if it went wrong, no problems. Okay, fine. But nowadays, it's said no. We connect tax to corporate social responsibility, to sustainability, and that is a board responsibility. Okay, then the last, the second dimension, accountability, of course, requires transparency. Here again, you see that the legal framework is improved, mandatory country by country reporting to the tax authorities, mandatory reporting by certain tax intermediaries and even certain taxpayers. And even, let's say, public country by country reporting, just not only to the tax authorities, but also public country reporting, enforced since 2000, 2021. But again, it's not enough, because this information is not enough for stakeholders to assess the tax behavior of companies. So therefore, there's the requirement of additional voluntary tax transparency. So we have then good sustainable tax governance. On the one hand, go beyond compliance with the law. Okay, what is it? Well, in the substantive component, it's about paying a fair share, and that means taking into account the spirit of law, at least not stretching the letter of the law for paying nil corporate income tax. And that's well known now. But also, let's say, the procedural good tax governance dimension, and that means procedural fairness, be open, be transparent, so that stakeholders can hold you to account. Again, here there are mandatory hard law obligations, but go beyond compliance. And I would say it's very important that you show somehow a kind of intrinsic motivation, not only by not only extrinsic motivation. That means only you do something, you go beyond compliance because the market requires me, because investors requires me. So you should show, I would say, intrinsic motivation. Okay, and that, I think, not that bad, qua timing, brings us to the conclusion. The different functions of public tax governance, again, this tax law, tax enforcement by the tax authorities, perhaps also a bit by judiciary, but that would be more difficult, but you could connect it somehow, I would say. Well, tax legislation has three functions. You know it: the budgetary function, distributive function and the regulatory or sometimes I call it instrumental function. And you could put them to good use for sustainability, for sustainable development goals. Corporate tax governance, so the payments by the tax behavior by the corporations. Important that corporate members of society bear a moral responsibility for sustaining society. So they because especially I already said those big multinationals are enormous, powerful. Well, I always say with power comes responsibility. If you have this power, you should exercise it in a responsible way. And tax-wise, that would mean that companies have the moral obligation to contribute. But again, they have the right to plan their affairs in a tax-efficient way. So it is a kind of balancing act. CSR, corporate social responsibility, for a long time, the companies had some experience, built up experience. Now they can use it, especially this idea of beyond compliance, and apply it to their sustainability or ESG strategy. Sustainable corporate governance then is a shift from SDGs to ESG. Stakeholders are pushing the sustainable tax planning agenda forward, so also with regard to tax planning. And again, the substantive and the procedural dimension, transparency to enhance accountability. Yes. So Marco, Professor Greggy, I hope I did well time-wise. It's not my strongest point, but I think I did not bad.
Absolutely, absolutely, Hans. Thank you very much for your time, for your presentation, for the original a new perspective that you opened on taxation in general, yeah, and on the way in which taxpayers should interact with tax rules. It's quite original for us because, as I'm used to say to my students, normally when we deal with taxation, we deal with rules that come from the law. So there's
Yeah,
something that you have to do, that you must do, something else that you mustn't do, period. End of the story. As you have seen, and I'm talking now to the students here in the classroom, but also to the students and the people attending this session from home, we have seen that there is another layer, a different perspective in the interaction, in the tax interaction between, taxpayers and the state. The SDG, this Sustainable Development Goals, and after that, the ESG criteria, environment, social governance, that's correct, are pushing or maybe urging taxpayers in particular, big multinational, to interact in a different ways. I know that there are questions bubbling up and up on the surface, but honestly, if you agree, we could make now, let's say, a 10 minutes break for the students. And then if you can stay with us for the second part of the meeting, there will be questions or short presentations from the PhD candidates and the students here for you. So maybe we can follow up, we can continue this seminar with an interaction between you and the student wishing to make an intervention. Is that
that's
fine with you?
perfect. Yes, that's perfect. The only thing is that unfortunately I cannot live be present with you, so I missed the famous Italian coffee.
So sorry. The next time. We will fix
Yeah,
it the
yeah,
next time.
yes. Okay, 10 minutes then?
So let's have like 10 minutes break.
Yes,
My
perfect.
watch says it's a 3:15. Let's meet together at 3:25
That's
with
okay.
questions and all the rest.
Yes,
Okay.
that's okay. Perfect. Yes. Okay. See you. You.
Okay. If you have a question or else. Dobbiamo lavorare. Allora, promemoria la prossima volta, cassa di imbarcazione, promemoria la prossima.
Il cavo va attaccato direttamente al PC, allo schermo.
Ma non lo so,
Eh,
sia sull'Accademia in entrata, ma questo sai, il monitor è l'entrata soltanto, perché però potrei nella prossima volta applicavo HTTP
Che penso siamo
10 euro. Prima c'era una dozzina di persone connesse.
guarda che segna.
Adesso una decina.
Ok.
Lancio un messaggio. Qui questa interfaccia.
Lei poi proprio una delle studentesse che parteciperà al seminario di adesso.
Oh, eccoci!
Lui che era il titolo.
Sì, il mio tema è sulla trasparency, quindi ho voluto sfruttare un po'. Sono quasi già a metà dell'opera, sì. Sì, no, assolutamente sustainability, però comunque ne ha parlato e mi è interessato anche il goes beyond, quindi il fatto di non stare solo sulla legge, ma vedere un po' anche gli ethical themes, quindi
A me sembrava una storia bella che ho mostrato come un tema insieme a filosofia, etica, legge e economia. Era veramente bandata rispetto a quelle settimane.
Ok, mando un messaggio ai ragazzi che sono a casa così sanno sicuri.
Ok. Sì. Ok, perfetto. Sì, no, perché io posto il problema di capire se la trasparency devo trattarla solo dal punto di vista del corpo delle multinazionali o anche public trasparency, quindi delle tax authorities.
Sì, lui
In maniera molto visto. Per quello io ho il dubbio di dire faccio un public private perché volevo capire anche i ragazzi delle altre università, cosa.
ma secondo me che riusciamo a metterci in contatto con noi si può sentire molto bene.
Perché ovviamente online la maggior parte dei cose che si fanno sono ovviamente che riguardano le multinazionali,
Chiaro.
direttive, sì. Sul public c'è un po' meno, cioè si livello all'interno, poi c'è.
Sì, perché poi quella più che devi trattare di bufetta, sì, esatto, devi istituzionare, però potrebbe essere bello.
Sì, perché io ho visto che anche per quanto riguarda il livello italiano, cioè la recepimento dell'Unione Europea, e la direttiva europea è stata recepita a fine di data
Sì,
c'è molto dal punto di vista che i redditi sperando poi penso a fine di quest'anno.
Sì, per quest'anno, il prossimo.
Finanziariamente delle statistiche per dire l'Italia mi sa più. E un'altra cosa, ho visto che a parte l'aspetto un po' fatto dell'Europa, anche invece da danzare invece tipo volontario, perché tipo ho visto anche degli articoli tipo dell'India o dell'Australia, che invece per tipo su base
Sì. ESG sono assolutamente il Sustainable Development Goals, sono stati inizialmente tutti, posso dire, offerti, come dire, su base volontaria di Stati. E per prova molto di lobby, cioè di pressure, però alla fine diceva giustamente il professore che tantissimi investitori adesso stanno puntando tantissimo. E quindi fa tanto che poi gli è andata dietro, l'Italia adesso gli stanno andando dietro perché non possono credere.
Già, sì.
Eccetera. Per cui dai, sembra che stia diventando più una realtà sempre più gente.
E ha senso continuare su una slide anche sull'aspetto internazionale, quello non serve.
Secondo me dipende da quello che stanno dentro la presentazione del leader. Sì.
E infatti, vedo che ci fanno proprio taglierò
Nella presentazione dipende come la raccontare voi.
Secondo me
Di come posso dire, del business, della questione delle imprese, come le imprese ovviamente la
quindi
procedura.
delle imprese.
Allora lì si rischia di andare un pochino per esempio, ve le sentite bene che magari uno parte con si prende il carico delle produzioni di fare la parte che deve essere del supermercato, quindi come la tua pubblica, quando si squadrata, e gli altri possono affrontare magari quella, non so, sociale, ambientale, in maniera più privato, ovviamente.
Sì, perché tipo io nella paper questo tipo di cosa la transparency e poi vari goals e come raggiungere quella transparency.
Certo.
Sono cose che ovviamente su articoli online, e ovviamente c'è tanto, c'è molto più internazionale che si parla dell'europeo, però in generale.
E adesso hai fatto i te e adesso di sì, ci sono state quattro molto più presentazioni di capire taglio
Quello che potrebbe mandare il numero di tema e cercare comunque di non mettere
no, adesso quattro se non
secondo me, probabilmente so che l'ambiente un paio di ricco nei punti e è più in tema, quindi stringe secondo me. Non so, per Mario.
Orange juice. Stavo arrivando adesso. Ok, dimmi tutto. Per esempio posso utilizzare quello che ho fatto. Quindi, cosa dici? Oh, oh. Senti un backup, ce l'hai? Vedi che aveva la. Vedi che aveva. Una rabbia totale. Vale, devo proporre. Sempre una cosa strana. Tu prova. Vabbè, adesso devi fare l'intervento. No, sì, sì, dalle lì ci sento. Perché per esempio, magari Francesco, non so se. Francesco Castro, per caso sei lì? No, magari a. No, magari c'è una sessione. Perché per esempio abbiamo visto. Non utilizzato. Quindi si vede che il Teams si è connesso in più come. Oh, pazzesco. Molto meglio di Google Meet, però Google Meet riflette. Chiuso. Fine. Sì, fra 3 minuti si parte. Comunque dai, sei tu, eccoci, dai. Vabbè. Magari sai cosa, ti avvicini di più, così che il microfono ti prende. Qui magari ragazzi, non so se ti. Ok? Dare il suo tempo e può utilizzare. E basta. Io non faccio. Oh, sono tornato. Quindi Alessandro ti dice magari parte lei con gli ESG. Ok, se la situazione tua, poi vediamo anche se degli altri. Ci si vuole avvicinare? Ok. So, certo.
Shall I stop sharing my screen? Perhaps that's easier, isn't it? How do I do
Yes,
this?
yes, Hans. Then if you can share with us the links or the
Yeah,
PowerPoint, it would be
I
great.
can send to. I will send them to you, Marco. Sure.
Terrific, terrific. So now, Hans, it's our time to talk, but thanks God, not my time to talk. but their time. We have students here on my left. You can see her, and we have Alessandro Casanova, Anna Miotto, and the others attending from home and from their offices. So, oh my God, I cannot see. Okay, now it's working because your image was frozen. Now you have read the paper or the papers. You are working on your thesis on topics which are very close to this or are influenced by the ESG or SDG criteria. Anna, shall you begin?
Yeah, sure. Hi, Professor. It's a pleasure
Hi,
to
Anna.
be with you again. And yes, as you know from the tier N, I'm working on ESG and all the taxation related to environmental and also energy sector. And I read your paper and I have a lot of questions. Yeah, 8
Eight.
questions.
We have, Hans has given us only 30 minutes. So,
Okay, sorry. I try to go fast. So long story short, the first question is about the fair share tax you mentioned on your paper. That you mentioned that a company who has a good governance must pay a fair share tax. And I was thinking about the meaning of fair share tax, because in my opinion, if we assume that a company pay without any kind of evasion or illusion, it will be the correct amount. So how can I relate the fair share tax with the ability to pay and these argument?
And do you have the corporate income tax in mind? You were talking about a specific tax, just corporate income tax, because
Yeah.
that's, of course, let's say, which is most discussed. Yes. So your question is how to connect the idea of a fair share to sustainable taxation?
Yeah, to the company taxation, the ordinary company taxation, because if I look to a company without any kind of tax evasion,
Yeah.
this is the explanation of ability to pay principle with all the criteria in every state or country. So, what is the meaning of fair share tax related to that?
Oh, yes. I see. Yeah. Well, actually, perhaps I should go back to one of the first slides, these different functions of tax. And the third function was this regulatory function. But the point is that this regulatory function is not related to the ability to pay. So the budgetary function, you collect tax and then you distribute the burden, and you could say, okay, the distribution of the tax burden, there the ability to pay principle comes in. But once you start to use the tax system as a system to incentivize certain behavior, to promote certain behavior, that doesn't depend on your ability to pay. for example, if I get a tax reduction because I drive an electric car, that has nothing to do with my ability to pay. It's just my behavior driving, at least buying in the Netherlands, an electric car. So if you incentivize all kind of behavior, then that means a tax reduction for people, and that's not related to the ability to pay. Is that yes? So that means that this ability to pay is not the same as a fair share. You could say, because a fair share, you could say fair share is everybody paying his share, and then you take as a measuring stick the ability to pay. But the moment you start saying, okay, but you may pay less just because you have insulation in your home, your house. For example, I travel by bike to the university. Okay, you get a tax reduction, or you buy an electric car. Then, or home ownership, promoting home ownership, you get also a tax reduction, very favorable tax treatment. That has nothing to do with the ability to pay. On the contrary, many people in the Netherlands who buy buy a house, who buy an electric car, are quite well off. So it's actually regressive. It's not an these tax incentives really change the tax system in a more regressive way. So that's one thing. But of course, it's completely legal as a private person, but also as a corporation to make use of these tax incentives. Because they're, for example, they try to make corporations use more electric cars. So it's completely legal to use the tax incentives. But for one thing, quite a few of these tax incentives are used as a tax planning tool. So it's using these tax incentives in a way which is not intended according to the intention of Parliament. So then you get aggressive tax planning just to minimize your tax burden by using these tax incentives. So that's one thing. But on the other hand, indeed, let's say if you ask a private person or a corporation to pay a fair share of income tax, of corporate income tax, well, that means, of course, that you start by abiding with the law, and if the law says, okay, but you can have this tax incentive because you behave in a way we as a legislator want, and that's good for society, that's promotes sustainable behavior, that's completely legal. I would say it's okay, but it means indeed, let's say, indenting the ability to pay principle. So actually your whole system is not the whole tax system. No tax system, I suppose, the moment you start incentivizing people in a way to behave in a certain way by using the tax system, I would say no tax system completely is completely in line with the ability to pay principle. That's not possible. So as a legislator, you should take into account that you have to change the behavior for people. You have to incentivize it, but you have also to mind somehow the ability to pay principle. Because if you only incentivize people who already are quite well off, and actually they earn money by making use of tax incentives, well, that could get, well, your tax system becomes more regressive and I would say out of balance. So again, it's a balancing act.
Okay, thank you.
Yes, does it answer your question, Anna?
Yeah, thank you.
Yeah,
Ella.
okay.
There can be mismatches.
Yeah, sure, yeah.
Here. I will go as fast as I can. The second one is about the public governance, because I studied a lot the thought of Ronald Coase and also Pigou, Arthur Cecil Pigou. And the first one thought that the market will ascend itself without any state intervention. Otherwise, Pigou, from which we derive the Pigouvian tax, suppose that the state must help to, I don't know.
No, it's working. It's working. The image is frozen,
Okay.
but Hans can hear us.
Pigou thought that the state must be involved in all the decisions. So then I read a book. I'm reading a book written by Thaler and Sustain about. The title is Nudge. They talk about gentle nudge, and I was thinking about that some mechanism, for example, the emission trading system that is under the Ronald Coase idea, so the market assessing itself. So I was thinking about if we can assume this behavior to make the choice free. With the ATS system, the first choice would be if you want, you are free to invest money for green, or you can invest money to buy some certificates, or otherwise you can pay administrative penalties or tax money, of course. So you will be nudged to do the choice better for yourself. So the ATS was the better instrument for now, better than the carbon tax, for example. So I was thinking about if we can link the sustainability goals with these new or old way to think taxes. So a gentle nudge in order to make companies free to do their best choice, and within their choice we can rate the governance, so the choices and their ability to become green or ESG compliant.
So your point, Anna, is whether the SDG can be achieved through a nudge system. So a nudge is a gentle push, right?
Yeah.
A gentle push.
It's like the
Yeah.
ATS, that is not a kind of taxation, is a sort of, you have a maximum of polluting, and you can choose the best option for you.
Just one remark. We only have half an hour, Marcus, so we could also say, okay, we leave it here for half an hour or so, and later continue somehow. No, just to be sure, because everybody wants to and I like the discussion, so because otherwise we might just talk about things briefly, which would be interesting to go elaborate more. So also to get the others, give a voice to the others. But on this point, Anna, it's an important thing that Pigou and nudge is not the same, because Pigouvian taxation, a nudge, the moment a certain amount of money is you steering your behavior, it's not a nudge anymore. So tax incentives are not a nudge, because it makes a difference whether you buy an electric car or not. You're rewarded, so to say. So that's very interesting. But you see sometimes the idea of nudging. For example, if in the Netherlands, if you have to file your tax return, then you get all kind of advertising on the radio, etc. And you say people are nudged to return the tax assessment in term. So that's a nudge. But a tax incentive is not a nudge, because it's about money. And I don't know the ETS system well, but the interesting thing here is also that actually, of course, you can use tax incentives, and perhaps it's too much done, but you can also just say, okay, but this behavior is prohibited. So what you see is often the tax system is used to change behavior, while the legislator does not want to use, let's say, real hard law in the sense of prohibition, of prescription. Just don't do this, and you get fined if you do it. So by using the tax system, let's say by using Pigouvian taxes, the idea is, okay, but people will earn money or pay less taxes, and then they will more eager to do it. So that's the idea behind it. But that, of course, points to the question, but sometimes you just should opt for hard law, for prohibition. This is not, you are not allowed to do this anymore. While if you use the tax system, well, people just say, okay, tax is a price, so okay, I just go on with polluting behavior. It's just then the tax, I pay a bit more taxes, but that's the price for polluting. There's a famous Israeli experiment on this. That was that it was in a crash, the ID crash for child care institution, and many parents came too late after, let's say, at 4 o'clock or so. They were just too late. And then the child care officer said, okay, but we just let them pay them if they come too late. So then they thought, okay, I just pay this fine, and I can come even later because I've paid the fine. So that's a very interesting. You think, okay, I fine you, so you will behave in the right way. But the people who can just pay it say, okay, that's fine. I pay the fine, and I come at 4:30.
Okay, so there is no link between a nudge and taxation. So
No, only in, let's say, if you talk about compliance.
Yeah.
If you try, that's Erich Kierkegaard's approach, from Vienna. If you go for a service-oriented approach toward taxpayers, that will enhance compliance.
Okay, thank you. Yeah, I think we can read the last one in order to leave the floor
Yes,
to
sure.
my colleagues, and I will write the other question by email.
Yes, but otherwise we could also organize a session like this just for your PhDs, Marco, if you like.
Yes. I don't want to abuse your time. Or maybe in June, if you have some extra time, we can arrange a visit of yours here in Ferrara.
Yeah, but I told you in June I have to lecture all over the place here in the Netherlands.
In July, I have no students, so we will do it in fall then.
Yeah. Okay, yes. Alessandro, perhaps. Oh, sorry.
Is about the rating ESG, because I
Yeah.
think we have a big problem about the criteria of the rating, because every agency has its own criteria. So I want to ask you, because online I didn't find anything, if you have in mind some criteria in order to evaluate corporate governance, environmental and social goals. For example, I'm studying about tax control framework, something that said, yeah, if you have a good manage of the tax risk, you can be evaluated with 1 more point, 2 more points, or double A, different between the rating of every ESG.
Here you have the GRI.
Yeah,
I think this one, the VBDO, so you can find it at vbdo.nl. This one is really about tax assurance, about the relationship with the tax authorities, for example, cooperative compliance. So this is quite detailed. And it started with Dutch companies, and now also European companies are examined, and it's based on publicly available information. There are also some Italian companies in this taken on board. So you could find it, and otherwise I can send it to you, but you can find this is a benchmark, and every year I think about 120 multinational corporations, no, not 120, 90 or so corporation are assessed according to this benchmark. And then there's an award for the best Dutch company and the best European company. And you can find the most recent report. You can find it on vbdo.nl. And there you see that this benchmark is quite detailed. So that might be of help for you.
Okay, thank you. Thank you a lot. I will send other question by email to you. Thank you.
Yes, and otherwise we organize another meeting online. Yes?
Thank you.
Yes. Now
Yes.
it's Alessandro's time. Alessandro Casanova.
Yes, sure.
Thank you, Professor. Thank you a lot. It was really actually enlightening. I really learned more about ESG and sustainable development goals through your presentation and your paper, basically, than in the last week, than in the last 3 months. And so thank
That's
you.
not
basically.
possible, Alessandro.
And
You're
really
too
just
kind.
one brief question. Basically, I'm during my studies, I studied kind of deeply some regulation about the European Common Market, particularly the foreign subsidies regulation, the state aid regulation, antitrust regulation, and a common point which unified those rules basically was the protection of the natural dynamic of the market, basically. So any kind of situation, economic situation where the state was basically involved and determining a distortion of the market, then the European Commission or the administrative national authority could intervene and could protect the market itself. At the opposite, the ESG, according to my understanding until now, functions are working on a different ground. I mean, here the public authority is basically intervening, is basically operating in a very deep way to lead the market logics and to protect some interests which are very well defined. And my question is basically this. According to your view, okay, this kind of huge intervention from the public authority could lead or could not lead to constitutional problems. Like in Italy, at least, but I guess in the Netherlands as well, we have some very, very clear rules about the protection of free market, for example, the protection of progressivity principle, and these ESG criteria that connected to the economy, to the tax deductions, to the to the life of the businesses. Do they risk, according to your opinion, to undermine this principle, progressivity, free market economy? Because they are, according to my view, very, very affecting the business life, the concrete business life, and they could undermine some principle which basically are at the ground, at the basics of our constitutional system.
Well, that's quite a question, Alessandro, for a tax law professor. But let's say from a legal point of view, I would say there's no such thing as a free market. And actually, Anna was referring to a book of Taylor and Sunstein on nudge. But there's also an older book by Sunstein, who is really an excellent American legal scholar, Sunstein and Holmes, Holmas, and that is called The Cost of Rights, The Cost of Rights. So actually, and it's not new because you also see this in the works of Adam Smith. Just go back to Adam Smith, the 18th century. He says a market cannot sustain itself. So there should be trust in the market, the invisible hand. But this invisible hand can only work if there is a legal system. if there's a legal system that sustains the trust in the market. Because if there's no legal system, you won't pay the baker anything because you're not sure you get your bread. You leave. So you won't pay. So there are no transactions. So you need a strong legal system because the other is a stranger. How can I trust him? Because he knows that if he doesn't deliver, I will go to court, so to say. That's one thing. But of course, if all markets are embedded in a legal system, what pays for the legal system? That's of course the tax system. And that again, you see the same idea by Adam Smith, and that's why and nobody would let's say no economist of the libertarian economist of what or the neoliberal economist would like it. But Adam Smith says that the taxes I pay are not a badge of slavery, but a badge of liberty. So, in other words, you pay taxes for the legal system, for the trust which sustain the markets. So, let's say completely free markets is, of course, a very libertarian idea, but you see what happens. You see very, very powerful companies who don't like laws, who don't like regulations. Well, and you see enormous inequality, enormous problems in society, of course, because they are really externalizing all kinds of costs to other people. So there's always again, the market is always embedded in a legal system and therefore in the tax system. And that means, of course, that there is a balancing act, because if you have too strict like regulation, okay, then people won't operate on the market. But well, that's more something which you should study with law and economics or something like that. But let's say a completely free market, that's really nonsense. And you see it also, let's say, economists like Joseph Stiglitz, you will know this guy. All these people say, okay, but we for too long a time we adhere to this idea of a free market, and it's just wrong. It's nonsense.
I see. Thank you very much. Thank you very much. I will dig more through the use of your authors that you suggested me. So thank you very
Okay,
much.
no, but I will send you this via Marco this paper of Joseph Stiglitz because it's very interesting.
Thank you. Thank you very much.
Yeah.
Okay, I see, Hans, that there is a couple of questions, a couple of hands raised. The first one is by Mkozizi Kutbayo, MT. MT is a colleague of ours at the University of Zululand in South Africa. So MT, can you hear us?
Oh, yes, Marco, I can hear you guys clearly.
Okay. MT, nice to meet you.
Same here. Same here. Thank you. It's been quite a long time.
Yeah.
No, greetings, everyone.
Nice to meet you.
Yes, same here. It's nice to meet you. No, actually, it's not a question, but I would like to firstly thanks to Prof. Hans for his insightful and thought-provoking presentation. Look, I want to comment this why, because it triggers something from me looking at the African perspective. As much as there is no perfect tax system, everywhere in the world, but it can always be improving on the tax rule. But for me, I think if you're looking at the good governance, tax governance of public versus the cooperative or private governance, I think it all starts with a good public governance, maybe in terms of like the eradication of corruption, because we can have a good system of tax collection. But then again, it goes to a government that who's very greedy, who doesn't care much about the needs of the people. And that automatically pushes away the good investors whom even the people, because the tax collection is also for the benefit of the people and also the improvement of the economy. So if we can eradicate corruption, especially within the African context, I believe that if these strategies can be implemented in an African context, the benefit and the good governance in terms of tax can be very, very profitable. That's what I'd like to comment, which is been triggered by your presentation, with which I say I can write many articles from what we've just presented to improve our public governance, a good sustainable public governance, even here in South Africa. Then I thank you. That was just my comment, Prof. Hans.
But I fully agree with you. Thank you very much. It's good to point this out because, well, actually, I was talking about government, the tax system, which should be responsive. But let's say the basic line is a corrupt government. Well, that cannot be responsive. So people really should have the perception that the money they pay, that is brought to put to good use. And if it just gets into the pockets or of tax officials or of politicians, then people, of course, are not inclined to comply.
Absolutely.
And actually, what might be interesting for you, then I know of an article which also talks about this CSR, corporate social responsibility pyramid in an African context, and it's written by a guy called Visser, and actually he says in an African context in developing countries, the first layer is the economic responsibilities towards society, but the second are the philanthropic responsibilities. So that is towards directly to the other members of society. And then comes the legal obligations, because in the developing countries, people rely less on government. Also, perhaps because government is often corrupt.
Absolutely.
So thank you very much. Very interesting, very important remark also. Yes, thank you.
Okay, thanks, Prof.
Yes, you're welcome.
And yeah, there are so many questions, but the last one I fear is from Francesco Castro, is another PhD candidate with me now, is currently in Heidelberg doing some research with Eckhart. Francesco, floor is yours. We have only a couple of minutes left. So
okay. I will be super quick. I don't know if you can hear me. Thank you, Professor
Sure,
Gribnau,
Francesco. Yes.
For the lecture. I basically wanted to ask your view on a topic that it's pretty related to my research topic, which is the artificial intelligence and the digital revolution. If you think, given the quick developments on AI, and if the current ESG objectives are still adequate, or they should be also reviewed to address the impact of the digital revolution, as well as before, like we discussed about you discussed about the governance and the role of the corporations. Also, in this fact, how a tax law can help on the shift in the digital transition, considering that many employees will lose their jobs. So how they could tax policies might help on this transition, and or if we need to invent other types of solution, even according to the ESG goals.
Well, Francesco, that's far a big question for me to answer, because I have hardly any knowledge of AI and etc. But you could say if people lose their jobs, well, then the budgetary function of taxes becomes more important, because you have to help these people out. You could also say you should go for tax incentives in the tax system to help people get AI qualifications and the like. So again, you could say, okay, but we have adapt to this. But I would say AI could be more an instrument than an end in itself. So you can perhaps, as a tax administration, use it. But mind you, you should not discriminate. You should abide by the rule of law. So that I'm sorry, but there are far too many aspects to this. So sorry, I'm flabbergasted by AI, but I think, let's say, the basic line, like the rule of law, etc. Well, that should still be respected, because otherwise you are lost.
Thank you.
Well, and another point, of course, is that AI. You see it in the US. Big tech becomes bigger. And that means more powerful, and that makes, of course, a more uneven power balance between even countries, between companies. And then, of course, these big companies, they go for lower tax rates. They are only interested in their own low tax rates. But of course, these taxes are collected for all people, not only because big tech thinks they can do it by themselves. Success in Heidelberg. Yes, because
Thank
you
you
will
very
learn there
much,
more
Professor.
than in my 3 minutes. I'm sorry.
No, it's fantastic. Terrific. Hans, thank you very much for your time. We really appreciate. We hope the next time to have also your body, not only your mind, here
For
in
the coffee.
Ferrara.
For the excellent coffee.
We appreciate the mind,
yes.
of course. We also appreciate the body.
Yes. Yeah, sure. And Anna, please send me your questions by mail, and perhaps we also could set up another long distance interview or something like that. Yes. Yeah.
Okay, sure.
Thank you.
Thank you.
Online. Yeah. Okay.
Thank you very much. Yeah, Hans.
Thank you very much for listening to me and giving me all those inspiration and new ideas.
Absolutely. We really appreciate it.
Thank you.
All the
Okay.
best.
Bye.
Thank you. Bye.
Bye. See you.
Bye.
Bye. Okay. Very well. Very well.